How's everyone doing? How's the week going so far? So this is the second video on market maker models, and I just wanted to touch base with you guys and show you the trade that I took today and give my explanation of how I look at price and how I follow market maker models. So if you remember anything from the previous video, I told you guys that we are looking at certain things. We are looking at higher time frame PDRA on specific days. It's time and price. It's not just the price. Time is equally important. You need to find good days where your setups would play out properly. You need to find good time, let's say 3 kill zones during the day where you have high probability of your setups playing out. So there were 3 things that I told you to always keep in mind when you're following market maker models. First one comes at high time frame PDRA. So today was a Tuesday. This is what we had. This is our weekly liquidity. So I'm just going to write it down. This is our ERL, external range liquidity. So we always start from weekly. We want to see what weekly has, if it has something for us. Then we go back to the daily time frame. And on daily also we had taken out this external range liquidity. So I'm not going to write it down. It's the same liquidity that we took on weekly chart. Now, anytime that happens on Monday, Tuesday or Thursday, these are the 3 days that I'm always hunting my setups. So we have taken this external range liquidity on the higher time frame. What is the second thing that I told you? We want to see consolidations on lower time frame. This is a lower time frame. All my trades are executed on a 15-minute chart. So we have this right here, consolidation. We have this consolidation. We have this consolidation. I told you that we need to have at least 2 consolidations before we start setting our goals, and try not to enter if there are not 2 consolidations available on your lower time frame. Now these are the 3 consolidations I'm going to mark out. So what do we have here? We have this consolidation, and this consolidation. Now, just a tip for you guys, you want to see if any of these consolidations, it aligns with higher time frame PDRA. Okay, so when I say that, so our first consolidation on a lower time frame, which is a 15-minute time frame, is aligning with this fair value gap on a 4-hour chart. So this is the lowest hanging fruit you can find. Okay, this is the lowest hanging fruit you would find. It's very simple from ERL to IRL, but you're using your market maker models on a high probability day. We had news also today, so we could expect the manipulation. This is our fair value gap. So let's go back to 15-minute time frame. Now, the next thing that you want to see, we have taken this external range liquidity, we have displaced below, and then we have an easy target right here. You don't enter right here. So we want to see retracements. Okay, so let me just play it out. Price comes down, and now price starts retracing. So I'm just going to pause it right here, and I'm going to show you guys how we find out our entries. This is how you find sniper entries, by the way. So we are going to mark out our dealing range and optimal trade entry. Okay, so take the fib out, start from the top, go to the bottom. That's your fib. Mark out the 0.62 and mark out the premium and discount. So what do we have here? This right here is our dealing range. Why is it our dealing range? Because our dealing range is basically when you're bearish. Okay, we have made a bias that we're bearish. We have taken this external range liquidity and we have a displacement. So this is only done to find sniper entries, by the way. So dealing range is always on your lower time frame. We have taken this side of the liquidity. We have taken this side of the liquidity. This is the swing high. This is the swing low. This is our dealing range. It's very simple. Now we just mark out our optimal trade entry, which is right here. I don't always use optimal trade entries. I enter mostly on equilibrium, which is just at the tip of premium, but I'm just showing it to you guys. Optimal trade entry. If I have to take second entry, if I'm planning like 2 entries, then I would take 1 entry at the premium and 1 at the OTE. So this is our equilibrium. Let me just remove this. So this is basically our dealing range. This is our 4-hour fair value gap. It doesn't look good. So this is our 4-hour fair value gap right here. Okay. This is our dealing range. This is our dealing range. This is our H4 IRL. This is my entry. I've also shared all my executions on the community. And if you want to see more details, just follow me on my Telegram and we can take it forward from there. So, okay, coming back to the trade, my entry was right here where the inverse fair value gap was. So this is our inverse fair value gap. We had a bullish fair value gap overlapping with our bearish fair value gap. This becomes balanced price range also. So I was only targeting 1:2. That's something I always do. I don't go more than that. That's enough for intraday. So now the entire basis of the trade was, in a summary, We had external range liquidity on our weekly time frame. We had external range liquidity taken on our daily time frame. We had displacement on our 15-minute, which is our execution time frame. And then we have consolidations as target, aligning with a higher time frame PDRA. So, and this was the lowest hanging fruit, and it was giving us a decent risk to reward, which is 1:2. That's exactly what I look for every day. So let's just see how it plays out. You will see how price reacts to optimal trade entry. That's just, it's not random. It happens every time, every day, anywhere. In some of the charts, you would definitely see how it goes. So this was simple and straightforward. We just targeted this consolidation, which was aligning with our high time frame PDRA as well. It was the lowest hanging fruit, and that's enough for the day. I've shared my live execution on the community section. If you want to get in touch with me, join me on my Telegram, subscribe to the channel. I'm going to share a lot more information on how I look at the markets, how I take these sniper entries. If I just remove this and then show you, once again, just see how price reacted to this optimal trade entry. This is not random. Okay, it doesn't happen just randomly. You had an entire narrative why you're taking the trade. It's not like, okay, there's just a displacement, so I'm going to enter. No, you have to build a bias, you have to build a narrative, and that's how you enter, and that's how you take sniper entries. So that's it for today. I'm going to make more videos on market maker models, and I'm going to explain in each part how I look at accumulation, what is manipulation, what is distribution. So this was today. I will upload the next video probably by the end of this week in this series. So keep watching, subscribe, and share.